Welcome everyone. How are we doing? Sorry about that late start there. And buying that dip just keeps on working. What's up everyone? How we doing? We're gonna give it a couple of minutes. Had a bit of a late start today, but then we will get to rolling. Nah. I'm supposed to leave tomorrow, looking like I won't leave tomorrow, but got some work to do out in the Midwest, and so gonna be out there for a few days, I think. Yes, sir. Yep, Detroit. We'll see. I'm hoping it works out. No, things are wishy-washy, we'll say. What a ripper today, huh? You just love to see it, man. Bears were on top of the world right here. Now they're starved to death again. Yeah, I'm just flying out to the Midwest to set up a trap in one of Lambo's houses out there. Wow, we got 2 calls in the house tonight. Wow. Wow. Wonder if they know that one was to everybody. Welcome everyone. We're just going to give this another minute or so and then we will get to rolling. Rudy, how we doing? Yeah, it is Agent J, but you can get it down, with either good trading, consistent trading, or sometimes, man, all you got to do is ask nice and they'll drop it for you a little bit. They'll drop it for most everyone down to a buck a contract, pretty easily. And then if you do more and more, prove success, prove you know what you're doing, trade enough money, they'll end up dropping them a bit more for you. It's like the market really went on a run after I left today, huh? Hope everybody did good. Nice sell into close. Didn't we have some earnings tonight? Anybody know what earnings we had? Didn't we have Broadcom? Was Broadcom tonight? Anybody know? Oh, yeah, Broadcom was today. Just smoking anybody who played it. Love to see it. Wow, yeah. Look at that thing. Apparently those fibs we pulled in class been just printing on this thing, huh? Oh, cost too. Sorry, I'm just playing catch up here while we wait for people. Cost got clobbered, huh? Not good. What happened to them? Oh, I guess only like 35 bucks. If anybody doesn't know, you can always just click on this live news thing on the side of Thinkorswim and see what kind of things we got going on. I mean, they beat EPS. Oh, missed on revenue by like $1 million. That's probably not very good. Probably guided bad too. Nice. What else did we see? Oh, Marvell or whatever. Say that. Oh, wow. You knew chip names can go down. We lost per share, miss on EPS, miss on revenue too. Wow, kind of decent. A few hundred million miss on revenue. Nice. Miss on them, huh? That multi-time frame thing is that is uh that's a custom one. I got it pinned in my tab though, if you want it. I think Toasty has it pinned in his tab too. Intel, huh? We finally breaking that range. Wow. Today was the entry on that, huh? Did that dip really even? Wow. What an entry it gave today. Hope you hit that, Jay. That was a sick one. Yeah, well, and if you can't find it, just let me know. I can help you out there. No problem. Okay, well, with that, welcome everybody. Sorry, just playing a little catch up on earnings right there. Uh, so welcome. I'm Dirty River. Happy to have you. Sorry we started a little late today. We're going to be talking EMAs. We'll likely run about 10 minutes long today because of starting a little bit late. But we're going to be talking EMAs, SMAs, the combos that I like and use. Well, varying levels of use from very frequently all day, every single day to other ones that I just kind of like to take note of. For anybody who doesn't know, we're going to talk about EMAs and SMAs. They are different. Sometimes, depending on your broker, they'll just call them an MA instead of an SMA. And so those are simple moving averages versus exponential moving averages. And a simple moving average, which is what we're going to start with today, is simple, very cut and dry thing. Let's see. We'll just kind of slowly start working onto some charts. I really like SMAs because they they're slower to move, they're slower to react. Their math is super simple. All you do to calculate an SMA is take the close of the candle together or add them all together and divide by how many there are. So when you see something like a 50 SMA, that's just taking the candle closes of the previous 50 candles and dividing by 50. That's all a simple moving average is showing you. It's just a nice simple way to say, hey, over this previous period, are people making money or are people not making money by holding the shares? And so we're just going to get right into this. For simple moving averages specifically, I mostly use them on the daily, use them on the weekly. There are people who day trade with them, but as you can see, they don't make volatile big moves very frequently. They'll show you a very defined trend. But what I like to tell people is if you are trading and a stock is trading anywhere around any of those major SMAs, and the ones again I use, this dark blue is the 20, light blue is the 50, and the pinky salmon colored one is the 200. Those are the really common ones everybody uses. When you're trading these things on the daily, you aren't, you aren't rushing into trades based on them. You aren't, doing anything like that, but you want to make sure that you are always aware of where they are. We can look at something like Apple, which really fought to hold its 200 day. And then when it finally decided to give it up, we've seen, big selling on it, $15 or something. $10 on it. So seeing big selling below there. We can see before when they sell below it, frequently stocks will only behave two ways when you come to the daily 200 and weekly 200 as well. You'll see something like this where you might get a couple tests, we break it, and within a couple of days, buyers show up really, really heavy. The other side of it is something like this, where you'll have a couple attempted breaks, and then you will ultimately be met with pretty good selling. However, what I always tell people to do, if you're trading anything, always zoom out and see how previous reactions have gone. Apple is the one we're talking tonight because interestingly enough, it will spend some time below the 200. Apple's a hard one. It's not a super fast mover. It's not, some big growth name anymore. It's just overall a really safe thing. So Apple can spend some time below the 200. And when it decides to spend a good amount of time below the 200, we can really see some selling. I know everybody's trying to catch the Apple bounce right now. Everybody has been for days. Scalps, everything, that's fine. But everybody's been trying to catch the Apple bounce and ain't nobody catching the Apple bounce yet. And so for me, to really turn back bullish on Apple, I want to see it back above the 200 day. That's where I'm personally going to get more bullish on it. You can do it on anything. I use it on SPY, obviously, all the time. Let's go to a different one. I think I got a blank one these days. I use it on SPY all the time. Oh yeah, nice trends we're working with. If you have the SMAs stacked in the proper order, 20, 50, 200, the market is bullish and the trend is bullish and everything about it is bullish and you should be looking to buy dips. Obviously, we get down to this 200 day, same thing. You can see a couple days below it, it is normally bought with aggressive selling. Again, a couple days below it, normally bought with aggressive selling. And then obviously 2022, it was the rejection point for multiple of those big moves down for us. So always, always, always take note of the 2050 and 200. They aren't, people try to just take trades off of them on the daily. And I mean, it does work, but I still don't necessarily love it being your only form of confirmation. These last few weeks we've been going over basically exactly how I trade, and now EMAs and SMAs are sort of one of the only indicators that I use. And so now we're getting into the indicators that I use for these next couple of classes. And so those are the SMAs. Use them for big picture things. If we're at the 20 SMA and it's been super strong, you're insane to be short. You can see, like, even here when we had that, big gap down, nice sell off here a couple of days ago, there was a bunch of people trying to short 505, 504, ignoring trends, ignoring these SMAs. There was plenty of reason to be trying the longs down here when everybody was chasing the short. And so just a really great big picture thing. And like I said, people use them on the short time frames. You can use them on the 5 minute, exact same ones. But I like to use an EMA if I'm trading on a shorter time frame. So we're going to get into my favorite EMA combos. I like EMAs. It's an exponential moving average. So the simple moving average math, piece of cake. Somehow Webull does it wrong, so always be cautious of, the broker you're using for those simple moving averages. But the simple moving averages frequently don't line up with Thinkorswim or, TradingView or any of the other major like charting softwares from Webull. Somehow they messed up, add them all together, divide by how many there are. But like I said, if we're trading on a short time frame, I like exponential moving averages. Their math actually puts heavier weight on more recent data. So the first one that we're going to talk about, the one that, I use, everybody uses, Flips uses. I think that basically every single day trader uses, some form of the 9, 20, and 50 EMA. So I use the 20. A bunch of people use the 21. The 21 is the more common one. You will see basically no difference between the 20 and the 21. So I like to stick with the 9, 20, and 50. That's just what I use personally. And so how do we trade these EMAs? We hear people talk about it. We hear flips talk about it. A bunch of people use them all the time. And so how we will use EMAs will almost always be in conjunction with levels or trends or things like that. You know, People try to buy every pullback to the 9 EMA. And sometimes you get a pullback to the 9 EMA and you catch a really nice bounce. Sometimes you buy a pullback to the 9 EMA and you get blown out of the water. So you want to take whole market context into the whole equation. So something like this, where we're kind of, starting to push down below the highs, the previous highs a day. We've seen some selling off the top. A bunch of people are looking for some sort of flag or consolidation into this 9 EMA that ultimately gets blown out. So when you're using the 9, 20, and 50, you always need to take market context into account. Things like, if the EMAs start curling and quit pointing just straight up, you can start to look for some consolidation. If the EMAs are going sideways, I know technically these are up a little bit, but they're much more sideways than a move like this or a move like this. If they start going sideways, the EMAs can kind of be one of the first things to pick up that the market is about to consolidate. Everybody hates chop. I don't know why, but everybody hates chop. And so when we see this big spike on the EMAs and then they just start going sideways with little ticks up, we can basically assume consolidation is going to come until the EMAs pick a direction. So how can we use this for our trading? Like we said, you can always buy pullbacks. You can buy bounces up into it. You can see, the 9 EMA pullback buyers got smoked. The 9 EMA pullback shorters got smoked on this move. And then we get consolidation. Well, how you might want to use something like these is take note of your consolidation. And we can talk about consolidation now because we've used this in all of my other classes. So if we're going to trade EMAs, we have to, really analyze how to trade EMAs. So the main things that we always want to look for are any sort of level. This was, the open where we ultimately failed under. And then any sort of consolidation. Well, when we're just consolidating between a level and an EMA, but we finally get a breakout, this is where you want to look to buy a pullback to the 9 EMA. We finally have a nice strong candle, could potentially be a continuation candle. You want to buy this pullback as the 9 EMA has really started kinking up. Now you ask yourself, where are you going to stop out? Because who cares about take profits? Everybody can give, random price targets based on nothing. I think the most important part of any trade is entry and stop out point. So you buy a pullback to the 9 EMA and you have support right below you, which had been resistance for all these candles. And now we've broken above it and we now have support below us and we have the 9 EMA. Your stop is going to be, you have one of two choices. Below this level and the 20 EMA, this is when these EMAs start to get really powerful. As I was saying with the simple moving averages, you don't only want an EMA or an SMA to be your only form of confirmation. As all of you know, when I say when you're starting a trade plan, you need to look at the bullish and bearish side and say, do I have more bullish things or do I have more bearish things right here? And base your trades around that. So you can play this one of two ways. We've broken resistance. We've had a nice push above the EMAs, above resistance, and now we're buying the pullback. So if you want a really tight stop, you're looking for a scalp or a bounce, anything like that, this can be your stop. We know that when we have an EMA lined up with a level, as long as we know our levels are good and we trust our levels, we know that that should hold us if we pull back to it. However, sometimes that stop will actually be just a little bit too tight. I mean, this is SPY. You need to, and it's worth 510 bucks these days. You need to give it more than 10 cents room more often than not. So you can start to look at this and say, if this looks really ugly under here, I'll stop out. However, as most of you know, I always talk about two things. Your stop out, you can say candle closes below this EMA and below this level, I'm stopping out. And that is your mental stop. Well, you also need to have a protective stop of where no matter what, maybe the trade's going to bounce there, maybe it's not, but you don't want to lose more money than that. Something that I'm always going to look for is, again, going to be some sort of support or resistance. So, I mean, it could really be here, which was basically the bottom of our range we were trading. And if we're getting a candle close below the 50, this can show nice change of trend. Below this 50, below this level, we stop out, hard stop out, no questions asked. So you buy the pullback, and this is, most of you know I like to wait for candle closes. If you're buying 9 EMA pullbacks, you basically need to enter mid candle. You need to buy it when it touches the 9 EMA, because if you're buying calls, you want to buy calls while the candle is red, hoping for the push back to green off of the 9 EMA. So you don't want it to test the 9 EMA and then take this bounce up, and I don't know exactly how this candle formed, of course, but you don't want to see it hit the 9 EMA, watch this candle bounce, and then take the entry somewhere up here when it's bouncing or the candle's closing or whatever it is. You don't want to enter up here because as you can see, you're making no money. Like there's no money to be made on a bounce like this. So you want to be entering as low as you can, and use these EMAs to tell you if you got the 9 and the 20 trending up, then you want to be looking long. You want to be looking to buy pullbacks. You want to find pullbacks into EMAs that supports trends, things like that, and taking those trades in the direction of the market. There's a lot of people that struggle with drawing trends and, how do I draw my trend? And if you don't feel super comfortable with that, use some EMAs because they will define the trend for you. If the EMAs are pointed up and to the right, the market is trending up. If the EMAs are pointed down and to the right, the market is trending down. Then you can catch these plays where you just ride the 9 and the 20 EMA up all the way. And then ultimately you never get a strong sell signal until this candle right here. So if you're entering over here, your stop can be that 20 the whole way up. And this is ultimately where you finally find that 20. And, we're obviously seeing the market pull back. That is where you will take the stop out of the trade, obviously deep in profit, and you should be trimming. And probably not a ton of profit because it was a slower move up, but that is a extremely common way to use EMAs. They basically draw the trend for you. And then you can see when the EMAs all go sideways, like we were discussing, people get blown out left and right. But we would have seen these things start leveling. I'm just trying to show you examples of using these EMAs. We saw these things start going level right around here. So, I mean, there was a kink up, was a kink down, but for the most part, these EMAs are just sideways. So until we find some actual trending momentum, most people want nothing to do with trading in here. You got to be fast, you got to be quick with it, and so just a really great way to use it. And something that, I use all day, every single day. Okay, next EMA that we're going to talk, and I actually want to go to a longer time frame for this because this is an interesting EMA. It's actually funny. I use it and I teach it to people a lot. But I frequently have said nobody uses it anymore. This is it's a pretty old school EMA combo. It's based on very short periods. So, like we talked, we still have them up, the 9, the 20, and the 50. Now we're on the daily chart. This is based on, 9 days of data is what makes this line. 20 days of data is what makes each dot on this line. 50 days of data, each dot on this line. Well, sometimes you want to really know what's going on in shorter time frames, like what's happening in the market. It's hard for a lot of people. even though there's been people who have been bearish all year, but it's hard for people to want to be getting long up here at these all-time highs, which I get it, but that is not a sign to short the market. That is a sign to still look for dips to buy pullbacks. Or dips to buy and pullbacks to buy. So an EMA combo that I love, I thought nobody really used it anymore. And then out of nowhere, here comes Tilio talking about it in his tab, is the 5 and the 13. Um, really strong combo. Most people have gone to the 8 and the 13 these days. I don't know why. Also another really, really great EMA combo, but I've always loved the 5 and the 13. And so you can see right now, on this longer time frame, we've been riding the 5 and the 13 EMA since November. We've had a couple attempted breaks that have ultimately been bought with very big buying. It basically helped you tick the bottom. Basically helped you bottom tick yesterday. I mean, it probably sold about 50 cents below it, something like that. But you knew you were extremely safe buying down here. I mean, not to mention the previous support from the last pullback, and bears are dumb, so they're always late, So you can see this is a very, very strong one on the daily. However, my favorite place to use it is on the 5-minute. And how I am going to trade the 5 and 13, the main thing that I'm concerned with when using it is actually crossovers. It's one that I love when they cross, because not only does it tell you that, there is a very, very good chance that the trend is about to switch, but you can frequently get some pretty explosive moves on it. So funny enough, the main cross today that would have been tradable is this one right here. Cross is going to form on this candle, and since the 5 is only looking back 5 candles and the 13 is only looking back 13 candles, when those cross, you're getting a very early glimpse that the trend might be changing. So you can see here, it crossed. You had to hold for a couple candles and basically see no red, and then you get a nice drop down. Obviously, that didn't happen anything because of the EMAs or anything like that, but gave you a very, very nice opportunity to try to short the market, and it was a time where it just worked perfect to have very little risk. You hardly saw red holding for those couple of candles. On the other side, let's see if we can find another trade where it took a nice cross. I was hoping it was going to be this day. So yesterday, maybe this was 2 days ago. This was something that I was watching. They're basically sideways. EMAs not helpful when the market is sideways. Took a nice sell, took a nice push back up, and we got a cross right here. So I took note of it. And the other thing that I took note of, is you always should, is any sort of these like little bits of consolidation, anything like that. If we're pushing back up into them, we know in any form of consolidation, you want to be long at the bottom, and you theoretically want to be short at the top if it presents itself. Obviously, this is 20 cents, so you aren't just scalping that. But we get a 5 and 13 cross, and then we get a nice push off of it, and we get a retest of the 5. This is the entry. And we get it treated the exact same as the 9 EMA or anything else. You're buying the pullback to here, and your stop is really just some fresh lows. You're really only going to be risking 20 cents or so of downside. And then ultimately looking towards this top of range, give or take 40, 50 cents of upside. And then finally, that previous high of day, which is over $1 above you, something $1.50 above you, $1.40 above you. So very little risk for a very nice reward trade just to these previous highs. Then, maybe you get to ride it all the way up. Maybe you're using that 13 as your stop out. If you do, good for you, Well, we start getting some consolidation. So we don't want to trade it. You don't want to be in a trade when the market's consolidating. Then, however, we get a very, very strong dramatic cross, obviously on the big sell, with a retest. So we know that, again, we're trying to be short at these EMAs. We believe with this cross, with the dramatic shift of trend, we believe that we can likely short the market. Stops are going to be basically over previous consolidation, a little bit of, 10 cents? 20 cents above you, something like that. And then downside, you're always just looking for previous lows. Maybe it's here, maybe it's this previous consolidation again. Obviously, you get the dumper candle, not always going to work like that. But then you can look to exit your trades. So the 5 and 13 is one that I really, really like to trade the crosses. But I have to give the disclaimer of it can be full of fake outs. Let's try to find a day where we've just had some real nice trending days. Okay, here we go. Horrible day to trade EMAs. We have like crosses, we have crosses, we have attempted crosses, we have crosses. Just this sideways where it is crossing every single candle. You don't really want to trade in anything like that. If you get the break above and you get the pullback, you can always try it, but you aren't so much trading. If you're taking a trade over here, do the EMAs give you some additional confirmation? Absolutely. However, you're taking a trade because it finally tried to break out of this range, if, we're buying the pullback for the breakout of the range. Sure, the EMA cross gives some confirmation, but always be very, very cautious using any sort of EMA in ranging markets because you'll just get too many mixed signals. You'll be stopping out of trades you shouldn't be stopping out of. How you really want to use these. Well, this one didn't even do it because it gave it in pre-market. How you really want to use these is when it is pretty obviously looking more explosive, like you have a dramatic push down with a bounce back up into it. That's when you can look to short it, or a nice push up, some consolidation, cross, and a push. You don't just want to, you don't want to be like, oh, it crossed, I'm getting long. Oh, it crossed, I'm getting short. Oh, it crossed back over here. I'm stopping out of my shorts right before the dump. You always want to be cautious if the EMAs don't have a direction. If their direction is basically left to right, then you don't want to be trading. Yeah, of course you can be scalping, but you don't want to be using EMAs to trade in that situation. Rudy, good question. As long as they cross, theoretically, your trade is still intact. I do have to point out though that, we've just had a lot of strong trend days lately. You get $1.50 push on SPY if you aren't trimming your trading poorly. So always be trimming, always be protecting profits, always, following stops up. Like if you're long on SPY, this candle, if you're long on SPY and you're scalping, you're day trading, this isn't for swing traders. Like if you're swing trading, don't ever look at the 5-minute chart. Don't ever look at the 15-minute chart, trade the plan on the longer trades. But if you're trading SPY, you get in on this break here and you catch $1.40 move up, unless you're down to just a straight up free runner, your stop better be closer than 70 cents. Yes, it ended up bouncing, but this was one that you should have stopped out of, if you're long from down here, don't let the trade go that far against you, of course. So still trade wisely. Don't just hold because some EMAs haven't crossed. Because like with anything in the market, bad news can come out and just absolutely obliterate you. So next one that we're going to talk, that's 513. Like I said, explosive crossovers is typically what I'm looking for when I'm trading something like that. And the next one that we're going to talk about is again a slightly less used indicator, and it's something that it's a little bit longer. And so what this one is the 12 and the 50. We'll pull it up. So the 12 and the 50 is one that I like to use for longer day trades, swing trades, things like that. It provides very, very nice confirmation of trend. If these things are really separating, you can assume they're eventually going to pull back to each other. But if you're seeing a nice see this gap that's forming between these two, this is one where you can start to really use this and say, wow, momentum's in my direction. But you finally get a close under it, you stop. Yeah, this is the 12 and the 50 EMA. And so you can use it on a shorter time frame, but where I really like to look at this is 15 hourly, things like that. And it's another one that the crossovers are strong. There will be less fake outs on the crosses. And if you're able to catch them, and this is, you want to look at those 15s, you want to look at those 30s. If they're just sideways, you got no business swing trading. But if you're seeing some nice movement on them and you're getting some, maybe pullbacks with crosses, you can look to buy these pullbacks. Again, if you aren't paying attention to support, resistance, trends, even VWAP, any sort of ranges, then you're missing the whole point of EMAs. They aren't this, one shot, one kill sort of trading method. They should only be used as confirmation for your other trades. However, this 12 and 50 combo is a really, really good one if you're into trading, longer trades. You aren't trying to scalp, you aren't trying to do things like that. And look to ride some of this momentum. I'm not saying that you should be swinging short just because you had a nice crossover here. I'm not saying you should be swinging long due to a crossover here. However, if you go back and really look at the results of these crossovers, you will frequently find that when you're getting the 15-30 hourly crossovers, that trend can kind of resume for a couple of days. Whether up or down doesn't matter, but look for those crosses and kind of try to trade accordingly. Like I said, works really, really works really, really well on these shorter time frames, or not shorter, but more medium time frames, 30-minute, hourly, things like that. Look for those crosses. And if you're seeing those crosses occur and you're trading in the opposite direction, this is one that, again, for the people that are having a little bit of trouble trading trends or drawing trends or things like that, this is one where you don't want to be fighting the trends on these. If you're getting a big momentum crossover, pullbacks to it and pushing, you don't want to be shorting against this. On the other side, you're getting big breakdowns. You don't want to be longing against this. And then again, with all EMAs, sideways, don't trade them. Don't use the EMAs. Of course, they provide scalps, intraday things like that. But if you are a swing trader or if you're into longer day trades, then EMAs can be, they'll be the bane of your existence if you're trying to use them in a choppy market. Of course, we know that when the EMAs are sideways, you likely want to be shorting at them, or like shorting lows, longing lows, shorting highs rather. Treat it like consolidation, and those EMAs in the middle can kind of be your, they can be your targets, they can be your price targets if you are into scalping like that. But again, if you're using this 12 and the 50, you want to identify those big crossovers, the volatile crossovers, and you want to be trying to, trading with the trends on this. One of the issues that anybody who starts to kind of fine tune with these different EMA combos will be, is you'll miss entries. So you frequently need to wait for pullbacks and things like that. Like we can see here on the hourly, it crossed at 543 in the after hours. We weren't able to enter until $2.50 lower. So you have to ask yourself, are you chasing? Of course, as you get into the shorter time frames, if you can catch some of these 15-minute crossovers during trading hours, that's where you can, get a better entry. But it's always important to remember, if you are watching for EMA crossovers on longer time frames, 30-minute, hourly, 4-hour, things like that, then you're frequently going to miss the really, really good entry, and you need to look for a pullback. But you can also always zoom into like some shorter time frames and look at it. But if you're into swing trading, if you're into those kinds of things, then use the 12 and the 50 for some longer time frame confirmation. However, I still prefer it mostly for day trades, maybe an overnight trade, something like that. The next EMA that we're going to go into, is my preferred one for swing trading. Actual longer swings, maybe it's going to be a couple days. Maybe I'm prepared to see some, contracts get clobbered for a little bit before I'm going to ever take my profit on them. So the EMA combo that I'm going to use when I'm really in the swing trading mindset. And again, not commonly used anymore. It's one that I like. It's just an older one. I've known about it for years, and it's just an older one that I like to use. That is will offer a slightly quicker crossover on the longer time frames, the hourly and the 4 hour. And so what this combo is the 13 and the 34. Going to be traded virtually the exact same way as the 12 and the 50. However, you are going to be able to get your entries a little bit sooner on these longer time frames. So if you start looking at 4 hour charts, because if you're a swing trader and you're freaking out over a 5 minute candle dropping a buck, then like the trade was probably bad. You're either too heavy, the trade was poorly planned. I mean, you're working against yourself if you are swing trading with time. And I'm not talking like the degen swings like we see with a lot of people in here. If you're swinging weeklies, it's fine. Just admit you're being a degen. And these strategies aren't necessarily going to help you, even if you're swinging next week contracts on those really expensive ones, you know, they're very high risk to be swing trading. So when we start looking for, potential changes in trend, things like that, EMAs going sideways as real swing traders, not chasing momentum on Nvidia, things like that, like you really want to plan a trade and you want to look for an optimal entry. This 1334 combo on the 4 hour and up, I mean, even the daily, I love it on the 4 hour, is a very, very powerful tool. It will frequently pick up crosses. I mean, here's some nice opportunities here. It will frequently register a cross, and because these are a little bit tighter, as I was describing in the beginning of the class, one of these is based off 13 days, one of these is based off 34 days. Because they're a little bit tighter than the 12 and the 50, you'll pick up these crosses on longer time frames faster. So you will frequently see the cross and get a bounce to close enough where you can, if the trade goes against you, and we'll just use this day as the example, you're looking to short the EMAs because we have got that strong cross on the 4 hour, which doesn't happen, these ones on the long time frame, they, if they're crossing a bunch, then the market's consolidating and don't be swing trading. However, how I like to use these, and I'm gonna remove my circle so we can see, you want to look to short the bounce here. And then for our stop, something that you can do is actually use this crossover value. So we know that it crossed around 433.50. We're going to be entering here 432.80. We know that we have 70 cents of risk on the upside to our stop out. And then again, just targeting some of these lows. You don't want to, oh, well, I guess these are really big candles, so it's not the best option here. But generally, you want to target previous lows, previous highs, things like that. Unfortunately, this example is ending up not good because this is like a $7 candle. But short here, stops up here, profit targets down here. And then it rides the trend. There's no reason, at no point in all of this sell-off do we ever get any sort of strong close above that 34 EMA right here. We get up there and close to it a couple of times, but we never get a close above it. Then when the market finally turns around, we get a little bit of consolidation as these EMAs move back together, and we get the cross. So you're really looking to buy dips down into here. This side obviously didn't present as quite as good of one, but we can still start to go into dip buy mode right here. And it will pick it up when people are still thinking that the market's about to dump some more because it's been selling. We're going to be some of the first ones saying, actually, this is looking like it could turn around. Same thing as here, looking like it could turn around. ultimately failed, but after a $10 bounce, and then here we go. I'm happy I saw one of these. If we're seeing this type of movement, these EMAs are useless to us. We need breakdown, sell off, retest. That's the ideal thing. You can see, of course, you can take the trade here, but because of how these print, this hadn't crossed yet. So it is always important to be patient and wait for a nice substantial bounce. This trade ended up, you could have made money shorting it, but the real nice entry was that bounce up to the 34. So your stop's just right above it, and then ride that thing down. So if you are a swing trader, for me on these longer time frames, the 13 and 34 is my favorite swing trading combo. Another thing I like about EMAs and specifically EMA crossovers, due to some of the weird like furors we have these days, like people like beat the drum on back testing to know how successful crossovers are. And if you go back and you look at a 1334 crossover, big picture over all of the crossovers, they have a pretty, as long as, it's explosive, it's not this sideways trending stuff, you're getting actual pushes off of it. They have a nice high success rate. That if you're swing trading, it's a very, very great thing to take advantage of if you can. And you should always use everything in your power to anything that gives you confirmation to swing for a reason. Not because the trade is red, not because NVIDIA runs always, but real reasons. You can always use the 13 and 34 as just some additional confirmation for your swing trades. Not just swinging on feelings, swinging for a reason. So that is the last one I'm going to cover as far as, less known, but actually highly effective, EMA combos. But I have one more that I want to talk about, and this is just, sorry, you need a drink. This is, as will be no surprise to anybody, something that I picked up from Al Brooks. And it's just a very, very powerful tool. Toasty was nice enough to find us a multi-time frame EMA. And so, Al Brooks and myself, we spend a lot of time on shorter time frames. 5 and 15-minute time frames are definitely, I get all of my big picture info. I look at SMAs, I look at trends, I look at things like that on the daily. That's how I start every morning, is going over stocks on the daily time frame to see where they're trading, to see where my bias should stand on things like that. And then I trade mostly on the 5 and 15. That's where I like to trade. So that's where I consistently trade. However, there's a you always want to know what is happening in the big picture. And so some of you might have seen, I'm sure most of you have seen, in my tab, there will be this ugly yellow stair-steppy line. And so what this yellow stair-steppy line is the hourly, and I should make sure I said it to the right thing. Yeah. Oh, nope, I didn't. I thought we were closer than that. Is the hourly, and you're able to adjust which one you want, whether 50, 20, whatever it is the hourly 20 EMA. And so we all know, 9, 20, 50, great EMA combo. Well, the hourly 20 is one that does a very, very good job of, and this is again, oversimplification, of course. If we're above the hourly 20, you should be looking to buy pullbacks. You should be looking long. If we're below it, you should be looking to short bounces. It's a wonderful tool for giving you, helping you build a bias for the day. So I get asked a lot, why does it look like stairs? Well, because it's an hourly 20, it only updates once an hour. So from here to here is an hour. So we get a new one here. Then we get another hour and we print another one. We get another hour and we print another one. So that's why it looks like this, because it only creates new data. So how can we use this to trade? As I said, if we're above it, then generally speaking, you want to be looking to buy pullbacks. Of course, as we pull really far away, you want to be more cautious, but it can work really, really well that way. It is also when we're trading around it, will frequently act as a very strong resistance or support. And so why that happens and why we'll frequently see big bounces or decent sells or consolidation or whatever it is right around it is because we know that over the last 20 hours, trading hours, we know who's making money and who isn't making money. If the market is above the hourly 20, then anybody who is in shares, and this is those high frequency firms, obviously no uh no, I won't say no, but like no hedge fund, no mutual fund, no high frequency person is looking, they don't have the hourly 20. They are the hourly 20. They are the data that is going into that thing being printed. So they know who's making money and who's not making money. So that's why we frequently see big sells to it, big bounces off of it, big sells under it, because it is the market giving up. The longs are now no longer long. They're closing their longs and maybe looking into short or whatever it is. Or if you're short and, the short's down, maybe some people got short down here on the break of it. Well, it's, you know, the shorts give up and the longs win, and it will frequently be a nice takeoff point, a nice, like if we're getting a nice sell off, it'll frequently stop right there. Or if we're getting a nice buy up from being short, it will frequently stop right there. And so it's something that, you, in my opinion, always want to have your eye on, just because it gives you that big picture of the market of who is making money, who isn't making money. And we're here to make money. So it's like I always tell you, don't try to be the hero swinging short on feelings. Don't try to be the hero swinging long on feelings. Just trade the chart. And if we're above that hourly 20, look to be long. If we're below that hourly 20, look to be short. That's what that's what I do. It keeps life very, very simple that way. And gives you a nice stop out. And then again, of course, if you go to the hourly chart, it looks just like a 20 EMA on the hourly. But if you're using it on this 5 or this 15, it's just a very, very nice reference point to have on your chart. So it's something I love, something that I use all the time. A bunch of people use it. Toasty started using it. I know Sushi Joe uses it on occasion. He's been tagging me with it, hitting some really nice trades. It's a great one too for any sort of like, it's a better one for consolidation. If you're into scalping and you're getting sideways 20, you can buy those pullbacks to it. You can buy or short the bounces up to it. Just a very, very powerful tool. Ugly on the chart. I get it. Not everybody likes clutter on the charts. So I don't, I add this one when I'm posting a chart, but I have one chart that has this and B bands on it, and they are just hideous. And so they just live on a chart together that I'm able to glance at when I want to, but I don't run this on my main chart every single day. I just have it over in that other square so I can always take note of where it is. And with that, we have covered all my EMAs. We have covered all my SMAs that I like to use. So I'm sure I've missed some questions in here, and I'll answer any questions. We can talk about them. Like I said, I got 10 minutes or so. We started a little late today, so always happy to stick around and answer questions if you got them. So let's see. Well, we talked about that entry, Rudy. Oh, nice, Peter. Struggling with trends. Run that 9 EMA. That thing pretty well tells you the trend. Oh, nice cornbread you got on that 5 and 13. Yeah, it it slaps. Oh, look, there's Sushi Joe. We got him in here. Apple had a 513 cross. Well, I see that you saw that I answered it, but right here, this is a nice one. I see if you bought the pullback because this is a nice volatile push, which is what you want to see to buy the pullback. Unfortunately, you got stopped out. It was still worth noting that this is technically a great big old range right here, even with this volatility early. But if you bought this pullback, you got stopped out. You got stopped out for like what? I mean, I don't know, 10, 20 cent dip on Apple. Then we're let down. Then we're let down if you tried to short it. And then finally, third time stuck. So this is one of those times where they were pushing up easy enough to get faked out of, but you need to take that big picture we're in a range into account more than anything else. Jack, I know that's you. I'm not saying your other name because I don't want to fuck it up. 12 and 50 recommend for longer swings. For those longer swings, I'd go 1334 if you're really looking for a longer swing. If you want an EMA combo geared towards swings, 1334 is for sure my go-to. When I trade on the 5 minute, do I prefer the 5 and 13 over the 9 and 20? Nope. I don't prefer one or the other. I think that they're both very powerful tools that we can use in different ways. Because you should glance. You shouldn't. I don't want to say you should, but you can glance at them both, and they will both provide you really, really good information. So we're looking for those 5 and 13 crosses to get an explosive push. The 9, 20, and 50, we aren't really using those for crosses. We're more using those for entries, exits, stop outs, take profits, defining trend on the day. They're the simpler EMAs to use to just trade in the way they're pointing and go for it. How do I feel about Brooks saying all you need is price action? I mean, so it's hard because in his book he says that. However, if you listen to him talk, he doesn't put levels on his charts. He's very good at just looking to the left and saying, if I'm getting long up here, I'm only targeting up here. The risk reward is not there. So while he won't have a level on his chart, he is 100% paying attention to levels. And then he will always take note of whole round numbers, which we as traders should too. 500, 505, 510 on SPY, for example, always take note of those numbers. So in his book, he does say all you need is price action, which is the truth. I mean, it really, really is the truth. You don't need indicators. You don't need to be drawing trends if your eyes can see them. If you can, the candles tell the story. The only thing on the market that doesn't lie is the charts. And the advantage to price action over anything like EMAs or anything like that, this EMA can't print until the candle closes. With price action, we watch that develop. So we can kind of start to have ideas of what we think will happen. And then him saying news. So I've never seen that in the book, and I have literally heard Al Brooks say news trumps technicals every single time. But I've seen a couple of people saying that Brooks says that lately. So I don't know. I mean, I've read some of the books. I have all four of them. I've only read some of them. But I've watched like the entire series from him, and he's pretty adamant that news will blow you out. And that's why you need to run protective stops, of course. The hourly 20 on Weeble, maybe they have it. I honestly don't know, man. I'm not a Weeble lover. Ask 1K. He's amazing at it. He's really, really good at it. And so ask him if he's got something like that on Weeble. I'm sure he could answer it for you. Oh, and now I'm seeing your second part on Weeble. I don't know. I just know that I don't know the exact EMAs that are calculated. I know that SMAs are frequently at different are very different on Webull. And so I have friends that use Webull and they message me and they ask me about, where's the SMA at? And I tell them, and theirs is frequently in a different spot, and the Thinkorswim one frequently works better. So that's all I know. Nice tea, happy you liked it. You shouldn't, Rudy, you should never scalp the 1 minute chart. It's just a waste of effort, especially on something like SPY, because the moves aren't big enough. Nobody should trade on the 1 minute chart unless you're like a futures trader that's really, really scalping, and those small moves can pay really well. But if you're trading on the 1 minute chart, I mean, you are faked out all day long, and like you can't make money like on a 1 minute candle in SPY when it's 7 cents or 8 cents. So there's no point to even look at them. Stick to that 5 minute and up, in my opinion. Nice, right on, Jack. Happy you got it. Yeah, see, in the 1 minute, I see what you're saying here. I just don't use it. I know and have met very, very few people that are successful on it, and I have met a ton of people. I've met a ton of people that have actually begun to trade substantially better when they got off the 1 minute. Jay, I won't say that they will do it if you are making more like I won't say that success is like a huge role, but like I know that one time I messaged them that I want, I trade a bunch of cheap stocks like AT&T and stuff, and that for my trading method, and I said, and look, I'm very successful on AT&T. However, this is how much I've paid you guys in commissions, and if you guys could just bump those down so I can trade these cheaper things, safer things, and book, you know, because I never trade like one contract of AT&T, and so maybe you're in 20 contracts at AT&T and you get a $3 move and they're trying to take $1.30 of that from you. So if you prove to them that you have a reason and you are successful with that reason, it absolutely helps get that number dropped. Yeah, you can change it to Jack, or you can just hop in VC one day and tell me how to say your name. Yeah, the hourly TOS that will be pinned in my that will be pinned in my tab. Um, Under you just click on the little pin and that'll be labeled multi-time frame EMA. Yeah, exactly, Javier. That's what I've seen from him. Yeah, exactly. Thanks, Testy. He got it for us. Uh, that's what I've seen from him is that like it can blow you out. But another thing that you need to remember about Al Brooks' books, and you might have noticed in the examples that the the SP, and he trades ES, he trades the futures typically, but you might have not realized this, but when you're seeing in that book and he is saying 500, that is ES and SPX. That's not SPY. SPY was $5, $10 at the time of the writing of those books. That's the futures he's talking about when you're seeing those ES charts at 500 or 800 or whatever it is. That's the futures. And so nowadays, the futures are at 5,159. So yeah, back in the day, you'd be trading those futures contracts and maybe news would drop you like a buck or, 50 cents or something like that. And that's a 1% move, that was going to be a big move. Well, nowadays, with a $500 SPY, and a news candle can be $3, $4, $5. The risk is so dramatically increased that I'm assuming that's why he doesn't talk like that anymore, and he understands that news can absolutely blow you out. However, he will trade technical things like double tops and double bottoms with very tight stops during news. So he still does, but I mean that guy reads price action better than anybody on the planet, so he can do whatever he wants. Yeah, Rudy, I don't mean to shoot you down or anything. I'm just telling you right now that in my experience and all the people that I've helped with, that 1 minute can be just a death sentence for a lot of folks. It just doesn't doesn't work super well, especially on options. It is very, very rare that one candle, 1 minute candle is going to be your all the trade you need. So just be careful. Uh You know, most people shouldn't like really scalp, like real scalping, short, like very short, quick things, because greed gets in the way. You inherently have to have a poor risk reward ratio. Scalping, you're frequently doing a 1-to-1 risk reward ratio. Sometimes even worse, sometimes you're scalping same days and you gotta let those things breathe a little bit and they get beat up more than expected. So scalping is extremely high risk. And this is another thing Al Brooks talks about. most people will fail at real scalping 5-minute candles, you know, like taking just those quick scalps because your win rate, it's got to be high. I mean, if your win rate's not sitting 80% plus, you are going to have a very, very tough time scalping technical bounces, technical rejections for just smaller, you know, 10-15% gains because you can get blown out. And if you aren't a person that absolutely respects stops, no questions asked, doesn't ever add to losing trades, like you need to have such strict rules to be a good scalper that it kind of takes away some of the enjoyment of trading. So, you know, what I recommend to most people is size down and look for, you know, wait for better entries and look for bigger moves. You're going to do substantially better than just trying to scalp those smaller technical moves on the market. You know, it is something that I love, but most people don't love it. Okay, well, that is it. So that's gonna do it for everybody. Great. If we got no more questions, I see we got a couple people trickling out. So thank you so much for being here. Sorry about the late start. Uh, you know, I always try to say if you aren't early, you're late. And today, I was late. Yeah, thank you, everybody. Thank you so much for being here. I really appreciate it. Had a great time. Um, I'm gonna be out of town maybe for a couple of days. We'll see what happens. But thanks everybody for being here and trade nice and safe tomorrow on Friday. Thank you all, and we'll see you then.